Hello everyone. Myself Namita Mari and my presentation topic is cash flow and fund flow. So let's start with that presentation. Cash flow statement. Cash flow refers to the outflow and inflow of cash or cash equivalent in an organization in a specific period. Cash flow statement is the actual movement of cash into and cash out of an organization. The flow of cash into the business is called cash inflow or positive cash flow of cash out of the firm is called cash outflow or negative cash flow. The difference between inflow and outflow of cash is the net cash flow. Fund flow statement. Fund flow refers to the working capital of the company, and a fund flow statement is a prepared to visualize the change in a working capital of the company over a period of time. In another word, it is a statement that shows how the funds are obtained, how they are put into use. Significant difference between the cash flow and fund flow. Cash flow, fund flow. Definition of cash flow. Cash flow is based on the concept of outflow and inflow of cash and cash equivalent during a particular period. Definition of fund flow. Fund flow is based on the concept of change in a working capital over a period of time. What is a calculated in a cash flow? Cash from the operation is a calculated in a fund flow. Fund from the operation is a calculated. What is a show? In a cash flow, it shows the in short-term position of the business, and fund flow it shows the position of the business in the long term. Purpose of cash flow that shows the movement of cash during the beginning and end of an accounting period. Purpose of fund flow to show the changes in a financial position of business between previous and current accounting period. Disclose cash flow. Inflow the outflow of cash. Disclose of fund flow. Source and application of the available funds. Accounting basis of cash flow. Cash basis of accounting. And fund flow accounting basis. Accrual basis of accounting. Part of financial statement. In cash flow yes, in fund flow no. Use for cash flow cash budgeting and use for fund flow capital budgeting. Statement of cash flow, operating activities, investing activities, financing activities. Advantages of cash flow statement helps to evaluate the current cash position. Second, projected cash flow help to know the future cash position. Third, it helps in taking loan from banks and other financial institutions. Fourth, helps the management in taking short-term financial decisions. Fifth, statement explains the causes for poor cash position. Disadvantages of cash flow statement. It ignores non-cash transaction, not suitable for income statement. Third, cash flow statement gives only a narrow features of working capital as a compare fund flow statement. Advantages of fund flow statement. Helps in knowing the source and use of fund. Second, helps in improving working capital position. Third, helps in assessing the efficiency of management, utilization of fund, helps in planning investment of funds. It shows relationship between working capital and net income. It evaluates post financial performance. Disadvantages of fund flow statement. It ignores the non-funds item. It is not original but just a systematic rearrangement of funds. Fund flow statement is basically historic in nature. Steps involves the preparation of fund flow statement. Statement of change in working capital, increase in working capital, decrease in working capital. Adjusted profit and loss account, funds from operation profit, fund lost in operation loss. Fund flow statement, source of fund, application of funds. Prepare cash flow statement of Suryan Limited from the following balance sheet. Liabilities from 116 to 31st 12 2006. Share capital 1 lakh from 1 and 4 lakh. 8% debenture 2 lakhs. Retained earning 60,000, 90,000. Creditors 40,000 and 1 lakh. Bills payable 20,000 and 40,000. Provision for tax 30,000 and 40,000. Assets goodwill 20,000. Machinery 1,25,000 and 4,75,000. Stock 20,000 and 80,000. Debtors 30,000, 1 lakh. Cash at bank 50,000 and 1,50,000. Cash in hand 25,000 and 45,000. Adjustments. During 2006, the business of a sole trader was purchased by issuing shares for rupees 2 lakh. The assets acquired from him were goodwill rupees 20,000, machinery 1 lakh, stock rupees 50,000 and debtors rupees 30,000. Provision for tax charge in 2006 was rupees 35,000. The debentures were issued at a premium of 5%, which is included in retained earning. Depreciation charge on machinery was rupees 30,000. Cash flow statement of Surya Limited solution for the year 2006. Cash flow from operating activities, profit before tax, extraordinary items, adjustments for depreciation of machinery 55,000, adjustments for depreciation of machinery 30,000, at 55,000 plus 30,000, opening profit below working capital changes 85,000, increase in creditors 1 lakh minus 40,000 60,000, increase in bills payable 40,000 minus 20,000 20,000, increase in stock excluding stock bought back, issue of shares less 10,000, 80,000 minus 50,000 minus 20,000, in less 10,000, increase in debtors excluding debtors acquired by issue of shares 1 lakh minus 30,000 minus 30,000 in bracket 40,000. Cash of outflow from operating income tax paid, net cash from operating activities 85 60 plus 20 1 lakh 50,000 minus 25,000 90,000. Machinery purchase for cash 2 lakh 80,000. Cash flow from financing activity, cash proceed from issue of shares 1 lakh, cash proceeds from issue of debentures 2 lakh 10,000. In outer column 3 lakh 10,000. Net increase in cash and cash equivalents 1 lakh 20,000. Add cash and cash equivalent at the beginning of the year 75,000. Cash and cash equivalent at the year end 1 lakh 95,000. You can go through that workings. From the following information relating to A Limited, prepare fund flow statement. In 2003-2004, share capital 300, 400, reserve 150, retained earning 30-60, accounts payable 45 and 135. Assets cash 30 and 90, accounts receivable 105 and 150, inventories 150, 195, fixed asset 190 and 210. Additional information. The company issued bonus shares for rupees 50,000 and for cash rupees 50,000. Depreciation written off during the year rupees 15,000. Solution. Schedule of changes in working capital. Current asset 2013 and 2004. Cash 30,000 and 90,000. Account receivable 1,05,000, 1,50,000. Inventories 1,50,000, 1,05,000. Change in working capital increase and decrease 30,000, 90,000 minus 30,000, 60,000. Account receivable 45,000 by increase and inventories increased by 45,000. Less current liabilities. Accounts payable 45,000, 1,35,000. So accounts payable decreased by 90,000. Working capital 2,40,000 and 3 lakh. Increase in working capital 60,000, 3 lakh, 3 lakh. 1,50,000, 1,50,000. Fund flow statement for the year in 31st December 2004. Issue of shares 50,000. Fund of operation 45,000. Credit side purchase of fixed asset 35,000. Increase in working capital 60,000. Total will be 95,000. Fixed asset to balance brought down 1,90,000. And by existing profit and loss account 15,000 depreciation. To cash purchase 35,000, so balance carried down 2,10,000. In share capital account to balance 40,000, by balance brought down 3 lakh. By cash 50,000, by general reserve 50,000, 4 lakh. Total will be 4 lakh. Adjusted profit and loss account. To fixed asset 15,000. To balance plot down 30,000. Buy fund from operation 45,000 and to balance carry down 60,000. Thank you.